Greetings, members one and all of the Salivation Nation. Stock market and silver rocked by fear. Is this a repeat of 2020? Let's explore. Yes, most of you probably have heard the headlines. The Dow Jones Industrial Average dropped well over 700 points at the close. It was almost 900-point drops. We're going to take a look at a few articles here and give my assessment as to kind of what's going on and what we can do about it. And in a sense, we can't control the numbers. We can't control what happens in the marketplace, but what we can do is protect ourselves for sure. The Dow dropped 725.81 points, or 2.1%, to 33,962.04 to be specific. And that's really, think about it, it wasn't that long ago when 30,000 points was a all-time record breaker. But that's kind of another story as to how inflated the stock market is. It's due for a correction. So that's what we're going to ask the question, if this is a repeat of what we saw last year. It was a broad-based route that sent all 30 members lower. At one point during the session, the Dow was down 946 points before recovering some ground into the close. The S&P 500 fell 1.6% to 4,258.49, with energy, financial, and industrial sectors as the worst performers. The tech-dominated NASDAQ Composite fell 1.1% to 14,275 points, its fifth straight day of losses, and the worst losing streak since October. Small-cap Russell 2000 dropped 1.5%, recovering after briefly dropped into correction territory on an intraday basis, down more than 10% from its March high. And the 10-year Treasury yield fell to a new 5-month low of 1.17%, exacerbating fears about the slowing economy. Crude oil also dropped 7%. So there's a couple of concerns that are coming together, but market technicals and concerns about growth. According to Mohammed El-Erian, chief economic advisor of Allianz and former CEO of PIMCO, told CNBC's Squawk Box on Monday. That's what all the asset classes are telling you. So it's on its worst, one of its worst days this year is what happened today. It's crazy. COVID cases are what driving the market, fear over the Delta variant. And they have rebounded in the U.S. this month with the Delta variant spreading among the unvaccinated, and I will also say among some vaccinated as well. The U.S. is averaging nearly 26,000 new cases a day in the last 7 days through Sunday, up from a 7-day average of around 11,000 cases a day a month, according to Centers for Disease Control data. Cases were already flaring up around the world because of this variant. And because of that, we have the SIBO volatility index surge 6 points to a high at 24.8 amid the broad market sell-off, hitting the highest level since May. The so-called fear gauge looks at prices of options in the S&P to track the level of fear on Wall Street, and that is what's happening today. The markets are driven by fear for this sell-off. We saw that last year. But on a grander scale, we saw a huge sell-off, especially of silver. We saw silver drop down to well under $12 an ounce. Could that happen again? We'll answer that here momentarily. Airlines got hit as investors reassessed whether travel among consumers would live up to high expectations, with shares of United, Delta, and America sinking about 5%. So the market is definitely hurting here. Pretty big drops all across the board. Like I said, oil is down, and all of these different measures are having an impact today, especially with a very much inflated stock market that's been propped up by easy money policies by the Fed. And gold and silver feel this bite as well. Kitco talks about this, and they're lower, with silver prices hitting a 3-month low, especially silver. Gold is relatively holding on fairly strong here. In fact, you know, if we're looking at the numbers right now as of the recording of this video, silver's only lost a $0.50, 50 cents, down 0.03%, whereas silver has lost over 2%, down $25.22. It was getting very close to $25 earlier. That has risen the gold to silver ratio up 2 points from when we did our market watch last night. That's 72.12 ounces of silver for every 1 ounce of gold. The gold to silver ratio, that measure there. And so that is what has happened here, and that's what's going on. It's crazy. U.S. bond yields, that's kind of helping a decline on some safe haven buying, but also people just selling in the market, ETFs and the like. But what does that mean for us that are holding the physical version, like what you see before you here? We're holding on, and we should continue to hold on. This is the worst time to sell. Don't sell if you're thinking about it and you're discouraged because of the high gold to silver ratio. But the question remains, is this a repeat of 2020? And I would make the argument that it is not. Even though I said in a prior video that we very well could see a sell-off like we saw last year, if possible, and that is the path to $20 silver, a video I did quite some time ago. And that's what could lead to it, is this big sell-off. I think the fact that the Dow recovered over 200 points since earlier today is a gauge that this is literally just a little fear bubble that has hit, and that the propping up will continue and the markets will recover. I believe they're going to recover from this. But there's going to come a time, folks, where they won't recover. But we'll see day after day of losses, and sooner or later, that's going to come back and hit us hard. We already have all of the stimulus that they put out there. How much more can they do? If we're hit again like we were last year, we may not recover from multiple days of these price drops. Now, I could be completely wrong on this. This could be the beginning of a bigger thing. But my guess is, you know, with the Delta variants that are out, that are stronger and more contagious and are mainly hitting the unvaccinated, that is a thing. There are still cases where they're hitting vaccinated folks as well, but that is going to play a role in terms of the fear index. But once they gauge this and figure it out, you know, that since there are vaccines, that, you know, the people that have taken the vaccine are mostly protected from this. There's no question about that. And that is something that I think will ease the mind of the markets. Now, obviously, some places are doing shutdowns and having mask mandates and all this stuff again, and people have varying different points of view on that, but that's going to have some economic impact, obviously, but not especially if things start closing down again, which I hope they don't. We just need to keep things open at this point and let the economy keep flowing. President Biden gave his speech today, and during that speech is when we saw some of the biggest declines. I don't think the American people really trust that he is the steward of this economy. You know, really, when it's all said and done, no matter what politicians say, the economy and how it works in the United States is driven by the private sector. And that is something that needs to be recognized by politicians. And so I think the private sector should be allowed to reign free here. But nonetheless, it is about fear, and that's the one reason why we're talking about the coronavirus, because it is driving these markets today, the fear of that. But maybe cooler heads will prevail and the markets will recover. But nonetheless, if we have more days like this in the future, you know, more than likely it's going to be exacerbated by not just that fear, but the reality of all that money that's flowed into these markets as being propped up by the Federal Reserve. And it's really not real money. In other words, money that's been earned and invested in such a way that used to be the case in the markets. This market is incredibly propped up and inflated. And so there's going to come a time where sooner or later something is going to give when we see drops like we saw today, especially in a multi-day pattern, because it's overvalued. What goes up must come down, so they say. And I think this is the case where the bubble is under a great amount of stress. And when you put too much stress on it, sooner or later it's going to pop. We have a pretty resilient economy, and to some extent even the stock market, but there's a lot of fear, which is tied to emotion, which is tied to the psychology of the marketplace. And it's irrational at times. And that rationality is something that's hard to measure. But what can we do for those of us who want to protect ourselves during these times? Well, we get this physical metal here, and we hold it in our hands to protect ourselves against economic instability. The silver that you have, that you paid a little bit more for, well, a lot more when you include premiums, you hold on to it. You don't sell it in times like these. And if you can find opportunities to buy without premiums being too crazy, these lower prices provide a buying opportunity. So take advantage if you can, because in the end, this is what's going to help protect you in the case of economic instability. And today is an example of economic instability. It just so happens to be due to the downside because of what's happening with the markets. This is a sell-off, and that sell-off has bled its way through the ETFs in the markets, and I think that's why we saw silver fall especially. Gold held its own, only dropped a little bit, and that should be another lesson to those that gold is more resilient than silver for a myriad of different reasons, and that is something to take into account as well. So if you're a hardcore silver stacker, I would encourage you to get a little bit of gold for reasons that we saw just today. Gold does tend to protect. Last year, in 2020, when silver fell, gold fell too, but gold didn't take as big a hit as silver did. So, food for thought in that regard. So there you have it. Let me know what your thoughts are on the markets today. So we keep up with the news and see what's happening. Let me know your thoughts. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.